Hello ETF fans, Mike here with today's video insight. Creeping up on the end of the year, so I thought it might be a good time to check in on what we've seen from ETF launches in 2024. To do this, I'm going to be using our interactive navigator tool located on the side panel under databases. So to navigate there, you'll just go to the side panel, open up databases, and open up the navigator tool. As a reminder, the navigator tool looks and feels very similar to our ETF dashboards, with the big difference being that the navigator tool is completely interactive and allows you to zero in and set filters utilizing our data, a lot of the data on our platform, to isolate categories, composites, different classifications, launch dates, things of that nature. So today what I want to do is I want to dial into just ETFs that were launched in 2024. So to start that process, I'm going to go over side panel, going to go into my filters on the side panel. I'm going to open up key stats, I'm going to go to inception date. I'm going to make this to be after. And once I put after, I can just type in 12/31/2023, hit apply. And now what we can see is that my data table just updated. It kept all the same groupings, but it updated to include ETFs that launched after 12/31/2023. So ETFs launched in 2024. Now once I have that, I can see, okay, there's $182 billion in ETFs that launched this year. So a lot of that money has come obviously from cryptocurrency. It is the story of the year, bar none. I'll highlight a little bit of that here in a second. Non-traditional ETFs take the second category. We're also going to dive into that, and then we can get into equity, more of the traditional equity, fixed income, a little bit of multi-asset, commodity, and alternatives, right? So in total, 21 cryptocurrency ETFs, 293 non-traditional ETFs, 201 equity ETFs, 162 fixed income, 17 multi-asset, 3 commodity, and 2 alternative. So specifically, before I hop into some of the key takeaways that I noticed, first let's just kind of take a quick look at what that looks like visually. I'm going to hit apply here so that it updates my charting tool. Open up charts, and there's that visualization. Take this down to 1 year because obviously prior to 1 year nothing existed. So year to date, see a nice growth in assets. 182 billion in total for ETFs that launched. But again, there's that crypto story. 69% of all assets tied to ETFs launched in 2024 belong to cryptocurrency ETFs, followed by non-traditional, equity, fixed income. So really complete reversal of what you would see if you looked at assets over time for all ETFs, right? Equity is by far and away the largest asset class, followed by fixed income, and then everything else. So we're seeing definitely an explosion in non-traditional, more alternative type strategies inside of the ETF wrapper. Looking at flows, drop that down into the year-to-date. See just a big growth here as some of these ETFs have gained traction, as well as what we're seeing is more and more ETFs that are converting from either an SMA using a 351 conversion or mutual fund to ETF conversion, which are bringing a lot of assets on day one on that conversion, which can lead to some of this growth in AUM. All right, so now that we've looked specifically at the broad area of what's going on with product launches year to date, let's dial into a couple of the more specific areas. First, within cryptocurrency, let's see who's dominating this space. So what I'm going to do first is isolate my dashboard. So I'm going to go to my filters column. I'm going to go into asset class, and I'm just going to isolate this to be cryptocurrency only. Now that I've done that, what I want to do is I want to group up brands. So I'm going to group up my brand, meaning the ETF, the brand name that the ETF issuer goes by. And what we'll see here, iShares, Grayscale, Fidelity. Look at this visually. Remember, just hit apply to update the changes to the charts tool. Open it up, and I can see that visualization, right? iShares with IBIT, 45% of the AUM. Grayscale lost a lot of assets this year. If we come down here to flows, we'll see huge outflows in their products because that was that conversion of GBTC. but still the second largest player in the space, followed relatively closely by Fidelity. And those three make up, pretty much almost 90% of the whole category. We've got a bunch of other 21 shares, Bitwise, who have significant AUM, but relative to those three, those three are really dominating this space. So again, as I mentioned before, love it, hate it. Crypto is the ETF story of the year. $126 billion in products following cryptocurrency ETFs, obviously mostly within Bitcoin, which we can check out, by the way. If we open this up, we can change this tool from brand. We'll change it over to composite. And by doing it by composite, it'll break it down by crypto, by the type, so we can see 90% or 89.2% inside of Bitcoin, and then 10.8% in Ethereum. Of note, the Ethereum has seen huge growth since the election. The last couple of months, there's basically, first 10 months of the year, there was no asset growth inside of the Ethereum, and then boom, starting in November and then continuing into December, we've seen quite a bit of flows into the Ethereum ETFs. All right, shifting gears. What I want to do now is I'm just going to get rid of that brand, go back to my asset class composite category. I'm going to go into my filters again. So over here on the side panel, on the right side of the data table. And I want to dial into non-traditional. What's going on with non-traditional ETFs that have launched this year? And so if I open this up, first thing we're going to notice is it's broken down by composite. So as you'd expect, equity size and style, $9 billion. If I look at that, buffer ETFs led the way in terms of AUM for new launches. Also 120 new buffer ETFs have launched this year. Non-traditional synthetic income, those covered call strategies, 32 for $3.6 billion. We saw some option overlay strategies. Usually those tend to be hedging strategies where they're providing some downside protection on broad-based asset classes. Long, short, leveraged, inverse strategies. What really jumps out at me, though, is this equity single stock. There's been 56 equity single stock non-traditional ETFs launched year to date. 40 of them leveraged inverse. So $5.6 billion in those 40 leveraged inverse ETFs. A little bit more of the crypto story with the MicroStrategy ETFs taking up 2.3 and 1.9 billion. I would note that this is just for ETFs launched this year. There's a couple of really big ones that launched the end of last year that are not showing up because we're just looking at ETFs launched this year. That single stock story, both leveraged inverse and then the synthetic income or writing call strategies on top of single stocks has been a big story this year. And again, there's that MicroStrategy, part of that crypto story. It's everywhere you look in the non-traditional, of course, the cryptocurrency space. You're seeing a lot of that. I would note when you look at the ownership of these ETFs that are part of the crypto story, you can tie very little of it back to 13F filings. So it's clearly a retail phenomenon, at least at this point, mostly being driven by the retail shops. So that's a quick look at the non-traditional ETFs. If I were to keep going down in here, just going to see a similar story. You got some leverage inverse crypto products within sector and industries. You got covered calls, some covered call strategies that launched across different sectors, different industries. Same thing with leverage and inverse. So just interesting stories there. But non-traditional, meaning just long-only ETFs, strategies that are using a significant amount of derivatives to achieve their investment objectives. Big story. A lot of ETF launches in this space, really broken out across buffer ETFs, synthetic income ETFs, and then anything single stock. A lot of single stock ETFs, and a lot of those have come out recently with a lot of filings going on. So I would expect that as long as there's an appetite from the retail investors for it, you'll continue to see those launches accelerate in that space. All right, last thing I was going to cover today within the new launches for 2024 is the active passive story. So first thing I'm going to do here is I'm going to go back into my filters. I'm going to add in, I'm only going to look at equity and fixed income. because the two traditional asset classes, equity, fixed income, we've seen a lot of big active managers get into the ETF space this year, into the ETF space year to date. So let's just take a look at what that looks like from a year-to-date perspective in terms of number of launches across equity and fixed income for active versus passive, as well as AUM and flows. So I'm just going to hit apply here. We can see 201 equity ETFs have launched year to date, 162 fixed income. But what I want to know is, what does that look like from an active passive perspective? So I need to open up my columns section, and I need to open up my classification. What I want to do is I want to group up, after asset class, I want to group up discipline, which is our active passive field. Pull that under asset class. And now that I've got that grouped up, I'm looking at $22 billion in equities. 130 of those equity launches have been actively managed strategies, $14 billion. Fixed income, even more lopsided, 130 of the 162 fixed income ETFs launched in 2024, been actively managed, and they represent over 80% of the AUM of ETFs launched in that space. So quickly, we can take a quick look at that from a standpoint of our charts. So I'm going to hit apply, open up my charts tool. This is equity versus fixed income for the year. But then if I change this to discipline, this is equity and fixed income combined. You can see that active represented nearly 70% of all assets in those equity and fixed income categories. As well as you can see, they dominated flows in most months. Last thing we could do is we could isolate here just by equity and fixed income. So let's first look at equity, hit apply. Now I'm just looking at equity. Apply those changes to my charts. Open it up. Change your toggle up here to discipline. And there you go. 64% of the AUM inside of equity ETFs launched in 2024 are actively managed. 36% in that passively managed. Quickly, we'll just close this up. Go back over to my filters. Change this to fixed income. Hit apply. Apply to my charts. Open it up. Change my toggle to discipline. And now we're even looking at a bigger skew, right? 79% of the AUM inside of fixed income 2024 ETF launches is actively managed. 21% passive. See that growth across the year, as well as we can go back here and see the flows, active versus passive throughout the year. So passive still getting a lot of, it's a decent amount of flows, but active at 130 launches versus the 32 inside of passive. You can, of course, then open that up and kind of get a sense. Fixed income taxable, fixed income municipal, so on and so forth. But just wanted to illustrate kind of what's happening in the launches across the U.S. listed ETFs year to date. Highlight some of the trends that we're seeing heading into year end, and also illustrate how you can use the Navigator tool to really dial in and identify trends in the ETF landscape using this Navigator tool. As always, if you have any questions, please reach out to team@etfaction.com. Love to set up a demo, illustrate anything, any of our tools, as well as answer any questions you might have. Thanks for watching, and have a wonderful day.